it was sort of a so-called good increase in the unemployment rate. If
Kia ora, and welcome to the New Zealand Property Market Podcast, brought to you by Cotality for the 9th of February 2026. I'm Head of Research, Nick Goodall, and today I'm joined, as per usual, by Chief Economist Kelvin Davidson. Kelvin, two pretty important releases last week, and we'll talk about those intriguing labour market stats shortly. But first, we have the first month's result for the housing market out, with the Cotality Home Value Index for January now published. What did it tell us, mate? And you're not allowed to use the term more of the same.
okay, yep. No, well, fairly flat. Yeah, I mean, continuation of recent trends, whatever you want to call it. It's yeah, minus 0.1% on the month. Yeah, just a relatively flat result, as I say. Now, regional variability, of course, and that's been something that's been in play for a while too. But yeah, I mean, we saw that minus 0.1%, I should say, at the national level. That's on the month, down. I think it was 1% year on year. So yeah, kind of treading water, whatever phrase you want to use without what you just said. Auckland down minus 0.3%, so it's been underperforming, I guess, the rest of the country. Good for buyers, of course. Not so great if you're trying to be a seller. And yeah, Christchurch was flat. I mean, other markets like Dunedin up slightly. So yeah, you've still got that regional variability going on, and we've talked about that for a while too, in terms of economic drivers. The fact that perhaps services sector is underperforming a little bit, that's kind of weighing on a market like Auckland, as well as the contrast with, say, farming sector going pretty well. That seems to be supporting maybe so-called provincial areas. One market I didn't mention there was Invercargill, still going up at a, well, it's not booming, but at a slightly faster rate than elsewhere. And you'd think that would fit with affordability, but as well as that farming sector going pretty well. So yeah, not the phrase you used, but sort of tracking sideways to a large extent, and it'll be disappointing for some, of course, and great for others. And of course, it's a good market for first home buyers at the moment. So always two sides to the coin in the housing market. I guess another thing we've obviously can do through the HVI is to look at property types, and we saw houses, I should say, standalone houses only, in air quotes, down minus 0.7% in the year to January. So that's kind of tracking sideways. Townhouses down 1.7% and apartments down 4.1%. So, there's regional variability. There's also a bit of variability there by property type as well. Now, apartments are only about 4% of our housing stock, and a lot of that's, pretty much in central Auckland and central Wellington. So it is really sort of a niche segment, if you like, and isn't geographically spread. But perhaps a wee bit more weakness there for apartments. Not 100% sure why, but we can definitely speculate about possible reasons. And I've heard anecdotally some concerns about build quality on some of these projects. People worried about buying an apartment and having some leaky home issues down the track. Not that that's going to apply everywhere, but that does seem to be a concern for some people. Body corporate fees going up, insurance fees going up, of course, and maybe the lack of net migration at the moment that would students, that sort of thing, potentially reduce the appetite to invest in apartments, because you'll see investors tend to perhaps buy apartments a bit more often than owner occupiers. So maybe there's a few concerns there from the investment community about apartments. So maybe just keeping a bit more of a lid on prices there. So yeah, bit of variability by region, bit of variability by property type, but when you add it all up, relatively flat. So I got asked by a journalist last week, sort of when do we start to see house prices rise a bit more significantly, if we do? And I mean, I found myself saying, well, it could be a few months yet. Maybe the headlines got carried a wee bit away, but it was, the tone of the headline was pretty much, wait till the second half of the year, which I can't remember if I exactly said or not. But yeah, it's not hard to imagine that if you think about where we've been over the last few months, kind of tracking sideways. And yep, interest rates are generally down, but people starting to worry a little bit more now about small increases on some of those terms. Labour market, which we'll talk about, is not exactly sort of roaring away. Some economic indicators looking better, others not quite so strong. So yeah, it could be that we don't see a lot of growth in house prices for a few months yet, whether it's the second half of the year or, towards the tail end of the first half, not sure. But yeah, it does just feel like there's, maybe a little bit of a flat patch to keep working through, I guess. So, yeah, hopefully that wraps it up.
Yeah, no, I think it's good. And I think, yeah, for me, it's the mixed signals of the economy, right? Like we keep saying, as soon as the economy grows, then we're likely to see that confidence flow through to the housing market and growth in prices off the back of that. But I think it is just, we're just seeing these mixed signals and the economy maybe is doing better, but it's not storming away. And so then when you're talking about some of those, you know, shorter term, next couple of months type thing, it's hard to go, yeah, but things don't change that much in the next couple of months, then why would the property market change that much than what it did at the end of last year or in January this year, which are the results we're talking about now? And I think that's where that caution comes through, saying, yeah, look, it doesn't, if things haven't changed yet, then there's not much in the short term horizon which is likely to change that over that period of time either. And that's where it's like, yeah, but if these still do eventuate, it just takes longer than we expected, then that's when it might flow through the property market. And I think that's why it sort of just feels like it just keeps getting pushed back and back. But mate, I have to say, I've never seen you look so thrown with that, me not letting you say that term at the start there. I wasn't quite sure if that stitch up would work, but you definitely were going to use that phrase, and I threw it out there, and you can't do it. So that has brought an interesting start to this conversation. But look, there's a few things I want to pick up on that you touched on there as well, and a few other little tidbits I wanted to pull out from the results, mostly at those sort of top and bottom performers. But off the back of you referencing the difference between the property types nationwide, also the question around, well, how does that look for Auckland, particularly because I suppose it's got a broader range of different types of property types there, more apartments as well. And so interesting, when you look at that 12 months, so it is the end of January last year to the end of January this year, apartments were down 5.3%. And I think, just to reiterate all your points, right, yeah, that demand from the new migrants coming to the country, which are likely to live in those places, if demand is down for being a tenant of those properties, then surely that, yeah, the landlords that own that, they're seeing less growth in rent, maybe even declining. They're not feeling the same expectation on capital growth, and we know that apartments don't grow through that growth as much as houses do anyway. So yeah, it probably just shows that expectation on apartments is even worse. And so yeah, when someone's being sold, they're not achieving the same price, and so the value, the change has actually been more than 5% down in Auckland for apartments. Flats or townhouses down 3.2%, so a little bit less. Houses actually down 2.4% in Auckland as well over that 12-month period. So, that's actually, more than just flat for Auckland, I would say. It's actually been down a couple of percent. Houses performing slightly better than townhouses and flats, which probably backs up some of the anecdotes we heard recently too, that there's been, with that increase in the number of townhouses being built, that they're maybe not performing quite as well. And there's slightly more discount when all those are selling because they're staying on the market longer and the demand has reduced for those types of properties. A bit more than for houses, where you still get your land and whatnot as well. So, yeah, look, it was just some useful extra data points, I think, to reference. In terms of, the things that jumped out to me, Dunedin, I noticed, was up 0.1% over the last 12 months. So, again, it's flat, but turning into the positive for me was worthwhile acknowledging that Dunedin at least jumped into that positive number over that 12-month period, even if it is only just, and could well change again, of course, in the next month or two. So don't want to get carried away, but it did stick out for those main centres that it sort of turned positive. I know Christchurch has done so already, but Dunedin jumped into that bracket too. From an overall perspective, in the last 12 months, you touched on Invercargill there, and it has become a lot more of a common story recently, but yeah, up 5.5% over the last 12 months. And for those that listen to our Decoding 2026 report, of course, a podcast, we did have an Invercargill agent there who talked a lot about the strength of the market down in Invercargill. So, yeah, just firmly backed up again by the January data here. Tairāwhiti, Gisborne, of course, up 3.8% too. So decent growth in that market in the last 12 months. On the flip side, Kapiti down 4%. So off the sort of Wellington market, that Kapiti in the last 12 months hasn't been going the best. I spent some time up there over the weekend, which we'll chat about at the end, of course. But yeah, interesting to see that one not performing quite as well, and maybe some of that improvement that we've seen in some of those areas that off the back of Transmission Gully over the last few years, of course, hasn't been sustained, and maybe it just shows that values are still a bit overvalued in some of the parts of the coast. So, well, certainly north of Wellington there anyway. So those are the things that jumped out at me. Yeah, anything more, Kelvin, that I've touched on there, or do you want to, push back on me not allowing you to say? More of the same?
No, no, that
I
was
got you.
fine.
All right.
Yeah,
The
no,
bit I got you.
yeah, not much more to be said. I guess people will just be thinking about where it goes next, and that trade-off between yeah, lower interest rates, but maybe still a slight bit of economic caution out there. Watching the labour market, seeing the unemployment rate go up in the fourth quarter. So there's going to be, yeah, conflicting forces. I mean, we had that phrase last year. It's maybe carried over into the first month of this year. Might carry on for a little bit longer yet. And yeah, there's this wider point, I guess we've been talking about in terms of well, it's not necessarily the worst thing if house prices are flat for a long period of time. It's not so good if you're trying to be a seller or you want to see some capital gains on property you own, but good for buyers, of course. So yeah, I think it's just a market where buyers still have a window of opportunity, I suppose. So, and we're seeing it in our buyer classification data. First time buyers still staying really strong. So yeah, good news story in amongst all of that.
Yep, no, for sure. No, well said. All good, mate. Then let's look at the economy and labour market release for Q4 in particular. Of course, the headline was that unemployment rate increased to 5.4% from 5.3% in Q3. A bit of a surprise, even for the economists that update their forecasts more frequently than the Reserve Bank. That still surprised them too. Though, as per usual with these numbers, you have to look a little bit beyond the headline to get the real true detail of how this labour market is performing. Do you want to take us through that detail and I guess your overall read on how bad this is or it's not so bad, and maybe at the end we'll get to the implications for the official cash rate in particular, how the Reserve Bank might read this. Of course, they're meeting in what's that, about 9 days' time, 18th of February, next Wednesday, to decide the OCR, issue the next monetary policy statement. So, yeah, we'll get to that shortly. But yeah, first the figures on the labour market, Kelvin.
Yeah, so we saw unemployment rate go up 5.3% to 5.4% in the fourth quarter of last year. So, I think in the end, any rise in the unemployment rate is not ideal. We'd want to see it be going down. So that's kind of, I think, the overall message here. It's not great, but yeah, when you split it down a little bit more, it was sort of a so-called good increase in the unemployment rate, if you can have that. And it comes down to a supply and demand argument, really. So what we saw was that actually employment went up. So there was job creation. So there were more people going into work in the fourth quarter. So that's good. It's just that on the other side of the equation, so there was more demand for workers. But on the other side of the equation, we've always got a growing working age population. There's still a bit of migration coming in. Generally, as people move into, they get a year older, you stock up the working age population a bit more. So that's always going on. But not only that, the proportion of those people in the working age population increased a little bit. So the participation rate went up. And, that could happen for any number of reasons. It's not as if it's a massive shift. But one interpretation is that people who otherwise might have been feeling a bit discouraged from the labour force, they're feeling a little bit downbeat about the whole thing, actually thought, you know what, there might be a job available for me now. I'll come back into the labour force and I'll start working. So, that you can view that a bit more positively. Yeah, we had some jobs growth, as well as that some other people who were previously out of the labour force felt like they could probably find a job too, so they came back in. So it's just that in these numbers, yes, demand for workers went up, but it's just supply went up a little bit more through that working age population effect and the labour force participation effect. So, yeah, as I say, it's not ideal. You want the unemployment rate to be going down. But if you do have a sort of glass half full perspective, this is, like I say, a sort of so-called good rise in the unemployment rate because you had people feeling like they could actually get a job again. So yeah, I think you probably want to view it in a slightly balanced way. It would be better if it was coming down, but it wasn't perhaps the worst outcome either. And I think, yeah, when you look at other measures, underutilization, you look at wage growth. I mean, wage growth is still pretty flat. So yeah, I think you obviously want the unemployment rate to be coming down, and that's what I think probably does start to happen from here on. You get more of that job creation. Maybe that starts to outweigh any rise in the supply, so you see the unemployment rate coming down. But just for the moment, there's still a bit of slack in the labour market. Wage growth still pretty flat. So if you want from a certain, if you've got a big debt or whatever, well, it probably does just suggest that maybe we've got some of the markets at least have got ahead of themselves and potentially in predicting those OCR increases to come a long way forward. And maybe it just pushes back on that a little bit, where there's still spare capacity. Yes, the economy's recovering, but not exactly booming. So maybe it just does just sort of push back the expected timing for those OCR increases a little bit. So that will be a good thing, definitely, for people who are struggling against big debt levels, for example. So yeah, always again, trade-offs in these figures.
Yeah, I think that's good. And that's kind of where my mind was heading to. I think, there was other stats in there showing that hours worked increased by 1%. So yeah, those people that already have a job, their hours are slightly increasing. As you said, I think you take that read on participation rate increasing, that yes, it is people having a bit more confidence in the labour market to go out there and try and find that job. So I do think there are those positive reasons, but and probably more to your point that later on, it's more about what's next, right? And it's not like anyone's expecting 5.4% to grow further in the coming quarters, or even hold there. It still is an expectation that it's going to start to drift lower. So I think, as you say, for that kind of result, it's as positive as it can be, despite getting worse by 0.1% in itself. And that has to be seen as a good thing. But more importantly, I think, the conversation in the last 2 weeks since we got that high CPI inflation read, that led to people going, well, they're going to have to drift the OCR back up again. You need to stop it being so stimulatory. I think this kind of does go back towards the other side of those economists who are saying, jumping the gun, bringing these OCR increases forward further into 2026. The economy is still struggling a little bit. Labour market's still not going great. Just tie ho on that a little bit and let this play out a little bit longer. And you can keep the OCR a bit more stimulatory for a little bit longer than having to get it back to what everyone seems to see as the neutral rate, around about 3%, which we're obviously 75 basis points away from. So that, to me, is where I sit off the back of this. That it does show that there's still some weakness out there. There's definitely no rush to get this OCR travelling back upwards, even though we had that inflationary figure outside the band. Of course, the expectation is still for inflation to come down. Yes, unemployment should also come down as well. The economy should start to grow, but it's not like those, even the more recent data or the faster moving data is showing signs of this storming away. It's still a little bit of mixed results coming through, showing that, we're going to stay where we are for a little bit longer. So that's kind of where I sit. I'm keen just to do a bit more of a look at where interest rates are at, and how much are they moving up or down or sideways, and what are banks doing at the moment? How are they pricing in the 6 or 12 months, and how much is this more recent data influencing that? So perhaps we can look at that over the next couple of weeks, and time that maybe off the back of the OCR. Not sure, but I think that'll be the interesting thing now, just to see how they're pricing in this, and what genuine chance have we got of the OCR increasing this year, later on this year. Is it only going to be 25 basis points? All those sorts of things, and what does that track look like? And maybe it's off the back of next Wednesday, when the Reserve Bank will update their forecast as well, which is much of it's a signal to market. It's a pretty decent expectation. So I think we'll sort of wait for that one. But likewise, like you said, wage growth not hugely there. If we're not earning heaps more, we're not spending heaps more, that's not going to push inflation up. So I think those signs for inflation to just slow down as well are not bad. So that's kind of my take on it. Anything else from that sort of labour market economic perspective that you want to touch on before we take a look ahead at this week and what's going on, before a quick roundup of the long weekend for ourselves?
Yeah, just two really quick things. And I think now this might have been reversed afterwards, but I think in the aftermath of those labour market numbers, sort of wholesale swap rates came down a little bit. So the market's interpreted those numbers as sort of a little bit more downbeat than what they're anticipating. So those reactionary swap rates, I think, did fall a bit. Now, as I say, it might have happened for a completely different reason, and it might have gone back up again. I haven't looked, but I think if that's a signal of what people are thinking, then it does sort of sway back the other way towards, let's not necessarily look for OCR increases anytime soon. And secondly, I guess just noting that it's the new governor's first monetary policy statement on next Wednesday, 18th. So people will be. I mean, we always look at it closely, but I guess there'll be an even bigger focus on it. Not only what the forecasts say, but kind of maybe does the style change? Does the communication style change? Are there new bits of communication in there? And there's been some speculation that at some point they might actually release the voting record of how people actually individually voted in these meetings, rather than just a sort of it was unanimous, or 4-1 or whatever, actually say what people did. So whether that comes through, we'll have to wait and see. But yeah, people will be watching closely because it just is that her first monetary policy statement, and it's a biggie. I mean, there's been some some different things have happened over the kind of 3 months since the last one. So yeah, she'll be an interesting one on the 18th.
Yeah, get her read on the global picture, of course. How much does she pay attention to that, as well as everything locally? Yeah, I think there's usually a press conference about an hour after the statement comes out, so you actually get to genuinely hear directly from them, not just the quotes or the way that they get to write it in the statement itself. So yeah, like I think you're right that it'll be a well followed one. There'll be some intrigue into her communication style. She's talked about transparency, so yeah, we'll certainly wait and see how she comes across on that one. Certainly will set her, stall for what to expect in her term, however long that's going to be. And I think that communication style is going to be one of the key ones we'll be paying attention to. No, that's a good call, mate. All right, well, that's all good. In terms of this week, I suppose people should look out for the pain and gain report. Always a bit of a media and consumer favourite for Q4. I know you're pretty close to finishing the report there, whether you want to give a bit of a tease on that one. Otherwise, from my perspective, up to Auckland Thursday, Friday for an event and a good few catch-ups with some clients and people in the industry. So really looking forward to getting out and about and hearing what other people are seeing so far this year. So if that's you, look forward to catching up and grabbing a coffee or a beverage at some stage. But yeah, anything for you over the coming week you want to plug or anything on the pain and gain report?
Yeah, quite a busy week. Lots of different little chunks of reports to either finish or start or progress. So there's a lot going on there. Yeah, pain and gain. It's. I mean, the numbers look relatively flat. I think that fits with what we're seeing for property values themselves, and there's a bit more pain out there than perhaps there has been over previous years, but also I guess, and so saying that buyers kind of have the ascendancy really with listings still where they are, but it's not like vendors are having to sort of capitulate either. So I think that the numbers and the report will sort of just kind of convey that message that there's it's probably still in favour of buyers out there, but vendors aren't necessarily having to collapse either. So yeah, a bit more pain, a bit less gain, but not collapsing or anything. So yeah, that'll be the general tone.
Yeah, nice one. No, all good, mate. Well, that'll pretty much do us. Anything to report over Waitangi weekend, mate? Anything happen interesting done those ways?
Yeah. Played a bit of golf on Friday. It was good. A bit of gardening. Weather was nice, and then had a 40th birthday party on Saturday night, which went well into Sunday morning, which is a bit too late for me nowadays. So feeling I'm still a wee bit tired this morning, but it was a great party. Caught up with some neighbours and the guy was having the 40th, friends from his high school days. So it was cool to maybe get a few of those backstories. So yeah, and I don't have many 40ths anymore, so I'm a few years past that age myself. So it was good to have a party. So but yeah, paying the price now because 2 or 3 a.m.'s a bit too late for me. So but yeah, it was great. It was great. So yeah, no complaints. Busy week this week will help refocus the mind on work. But yeah, yourself, you away
So
camping?
you're saying the 40-year-olds make you feel young again, mate, until the next day, and then you feel very old again.
Yeah, possibly something like that. Yeah, I hadn't thought of it in that sort of way, but yeah, spot on.
No, good on you, mate. Yeah, well, we were off camping up in Paikakariki holiday camp, which was great. We've done it a couple of years in a row now with the same families, two of the families, same aged kids. So yeah, genuinely get a chance to relax. Weather wasn't ideal. Weather was starting to come good on Sunday when we left, which is a bit frustrating, but a bit overcast and windy on Saturday in particular when we had the full day there. So yeah, a little bit niggly, but look, mate, no complaints really. Kids enjoy themselves, don't want to leave, get on really well, no major incidents. Sleeping was all pretty good. So yeah, good times up there, and just a great spot. It's all families. There's just kids everywhere, all on their bikes, and yeah, that's certainly one that we look forward to every year. Not always sure on which weekend or which part of the holidays we go back there, but that'll certainly be another one for the list next summer, and also just being out camping. Kids are keen to make sure we do it again this year, this summer. So yeah, whether we go somewhere else or otherwise, we'll sort of see what other long weekends or other opportunities there are to head off after school on a Friday maybe. So yeah, really enjoying it, and yeah, tough to do all the unpacking when we get back, but things are mostly back in order back home yesterday afternoon, and yeah, like I say, get into the busy week ahead. Did still manage to take the old cheeky tablet and catch the Phoenix on Friday, which a bit frustrated from a men's perspective, but hey, the women have gone top of the league, so we'll just talk more about them than the others. Though it was good to see Sarpreet Singh, who's one that the Phoenix brought through, a number of years ago, would have been 7 or 8 years ago when he went off to Europe. He's come back on loan to get a bit of game time before the Football World Cup later this year. So he's a decent signing and will certainly improve our attack even more, even though it's been pretty decent. So just got to shore up the back and the men will be fine. And also enjoyed watching the Black Caps last night. I remember we lost the opening match a couple of years ago to Afghanistan. So certainly didn't underestimate last night's game, and good to see, Seifert go get some runs when Phil Allen goes early. So I think we've got a number of batters that can step up in a pretty deep batting lineup, which will mean we'll do okay this tournament. But there's some pretty wicked teams in that competition. So yeah, certainly not favourites, but can't go worse than starting off with a win and getting things going on the right foot. And we'll see how they go through this tournament. I think great. Start time is 6:30 p.m. Although I know not all games are that time. Some of them are pretty early in the morning, but we'll certainly enjoy them when they do start at that time. And yeah, we'll keep a good eye watch on that. And I also love to get the kids into the Winter Olympics too. So I've had a bit of that on. I watched some of the big air yesterday with the men, and saw the women were qualifying this morning. So I suspect their competition will be tomorrow for the medals. And Zoe Sadowski-Synnott, a chance to win that gold there, hopefully. So yeah, plenty going on from the sports perspective, mate. But I better cut it there, or we'll have more sport chat than property chat, and we know that doesn't always go down so well.
No, well, we'll see what the listener feedback's like. But yeah, no, I'm fully with you with the camping. Love it. It always feels like the packing doesn't take too long, but for some reason when I'm unpacking, it feels like I packed twice as much stuff as what I thought I did. The unpacking just seems to take forever, and frustrating after you've had a good weekend away to have to unpack. If I could get somebody else to do that'd be handy. But yeah, pleased to hear it went well, because it's a cool thing to do. I'm fully on board.
Yeah, no, it is. It's great fun. Cannot talk highly enough of it. So yeah, we're slowly accumulating more stuff too, whether through us or families or friends or whatever. The setup every year, hopefully, will just get better and better and better. And not too many, comforts from home necessarily. Just enough stuff that you can enjoy yourself. And yeah, not quite glamping, but yeah, you're not just completely slumming it either in some tiny tent, like maybe would have been the case 20 odd years ago when you just got the two of you. But anyway, mate, we will leave it there. Good to catch up as per usual. Thanks for your thoughts, mate. As I said, a couple of really important releases last week, so good to be able to delve into much of those details. Otherwise, just want to say thanks very much for listening. Please do get in touch with any questions or feedback. How'd you spend your Waitangi weekend? Happy to get your take on any sports at the moment as well. Super Rugby starting this weekend, of course. I've gone and got a Hurricane season pass for me and the kids, so one of the kids anyway, whichever one wants to come each week. It's a free when you get an adult pass, so looking forward to catching a few Super Rugby games. So yeah, there'll be plenty on, so do get in touch, let us know what you're up to. But otherwise, that'll do us for today. My name is Nick, he's Kelvin, you've been listening to the New Zealand Property Market Podcast. Mā te wā.